Thank you very much, Adam. So we are welcomed by a lovely panel today, specifically on operational resilience. Next to me, we've got Alison Bliss, who is the General Manager for Operational Resilience from APRA. We've got Bryony Evans, a technology partner from King & Wood Mallesons, and we've got Dan Clarke, the Chief Resilience Officer from Commonwealth Bank of Australia. So we've got different views and perspectives on the panel today. Obviously come from a regulator, from a regulated entity, as well as a advisor as well, and obviously looking forward to hearing from the three of you. We have and are continuing to see disruption of critical services to customers in the broader market, the inability for customers to access cash, money, credit cards, inability to process payments, the heavy reliance, as we mentioned earlier, on service providers and fourth parties, again, the heavy reliance on technology, critical systems, and the complexities that come along with that. John, as I mentioned earlier today, that CPS 230 was introduced to lessen the disruption from failure. So let's jump into it. So Alison, I'm going to throw to you first. What is CPS 230 designed to achieve in terms of improving resilience in the financial system?
Thanks, Gavin, and thank you for the question. And I just want to say thank you to the ABA for the opportunity to be part of the panel today. I think that the heart of CPS 230 is really ensuring that we can meet the needs of our customers and keep the financial system safe and secure. And I genuinely mean we. It's not just you as entities, it's us as regulators as well. And that point around 230 really focuses on business disruption, but it really elevates customers as being the key stakeholders in resilience and the impact of disruption. And I think, Gavin, you've touched on sort of, I guess, the case for resilience and the fact that we've seen through a number of big sort of recent events that disruption can occur internally. It can also occur externally, and third parties is a particular element of that. And the community's tolerance for these sort of major disruptions has been decreasing over time. And that's not just a appetite piece, it's a real life experience that parts of the community have had to suffer through. 230 really elevates focus on third parties and risk management of third parties by entities. So gone are the days where outsourcing focused pretty much solely on the negotiation of contracts. And we're really in this space now where when activities are performed by a third party, the risk remains your risk to manage. And I think the third part is that real resilience, which John was talking about this morning at a whole of system level. We really see this sharpening over time, and I think just our panel beforehand on AI gave us a really good example of actually the increasing dependence on third party to really support that activity. Really kind of will sharpen our focus on things like concentration risk and how risks are actually being managed through banks, insurers, superannuation funds, and those risks actually might sit outside of the financial system directly.
Thanks, Alison. So Bryony, how do you see this fit with the broader steps that regulators have taken in similar or related spaces?
Thanks, Gavin. Maybe just focusing first on APRA and how it's approached operational risk as well. And I really see this as a continuum. I mean, APRA has been focused on information security since CPS 234 came into effect, and we've seen the really active steps that have been taken, particularly in light of the recent data breaches. So from my perspective, 230 is a natural continuum from that focus on it's not just about a particular contractor and outsourcing, it's about the overall environment and different providers in that. I think the other context that I put this in from an APRA perspective is there's the focus on downstream providers, which Alison's mentioned, but also that broader financial market view. And I think that really does create a spectrum right across to resolution and recovery from a CPS 900 perspective, which I think is also really important context for operational resilience. In terms of broader regulation, again, from a holistic view, there's so many parts that really play into 230. It's not just 230 itself, it's directors' duties, it's financial accountability regime, and how that hooks into this as well. It's ASIC's approach, and we've seen that through the action that ASIC's taken around cybersecurity and directors' duties. So I think it's part of a broader ecosystem where all of these regulations need to be looked at together by regulated entities.
Fantastic. Thank you, Bryony.
Could I just make an add? I think to the question you asked about other regulators overseas, I think, look, all credit to APRA. If you look at the regulations in the UK, you look at the regulations, Singapore, Hong Kong, any jurisdiction that's releasing operational resilience regulation, everyone is focused on your outage time and your data loss. APRA is the only global regulator that's put in a clause within the tolerance section, so clause 38C, that's about a minimum service level. So how you're actually managing the impact on your customers during a disruption. So not just focused on how quickly can you recover and how much data are you prepared to lose, but how do you put the customer at the front by making sure you've got a minimum service level. And none of the other regulators have done that. And I think that's a great thing that APRA have done. I saw an FCA article recently where they're sort of hinting at that, which I think maybe they're learning from some of what APRA is doing. But I think that sort of anchors it back to Alison's comment earlier about this not just being about resilience for the stability of the system, but resilience for the customers that we're all here to serve.
Fantastic. Thanks, Dan. So then following on from that, so the very much anticipated guidance that's obviously been released, the final guidance now. Alison, going back to you, could you highlight the key changes in the guidance, anything in relation to APRA's expectations for entities as they prepare for go live?
Yeah, thanks, Gavin. And I think John covered a little bit of this morning for those that were with us, but I think you'd be all aware, and I think most people participated in some form of feedback, whether it was response to the consultation in a written sense or industry associations leading the way with bringing groups together and bilateral engagement. So thank you for that huge amount of feedback. And I think as you will have seen, we've taken a lot of that on board. We've tried to take a balanced view and incorporating that feedback, so trying to remove complexity where it really wasn't helping, but also trying to make sure that we still keep that sort of end state of safe, resilient entities and financial system in mind. A couple of the things I'd call out in the guidance, which again I think is fairly straightforward. So we did streamline the guidance to be clear on our baseline level of expectations. So we acknowledge that the better practice examples that were in there were sort of driving some confusion and perhaps sort of confusion around where to calibrate. And I think you will see, and you've probably no doubt heard in any engagement that you've had with us, this focus on critical operations, material service providers and tolerance levels. But with the guidance being streamlined, the sort of key there is that entities can shape their resilience frameworks, policies and actions in a manner that's aligned to your own business strategies and risk appetite. So the flexibility is really in there. The second thing I'd flag is we've actually tried to provide a lot more transparency than we normally would from an APRA perspective. So in the response paper, we've provided something that I think kind of is akin to a compliance checklist, which gives sort of the 10 commandments of what to get through. And we've also given an early indication of how we anticipate transitioning our supervision. And I think that's a really important piece, that we had heard some uncertainty around what would happen on day one and, where our expectations would land. And would we be, heaven forbid, doing a 2, 3, 4 tripartite type arrangement? We've tried to give you some good insight into sort of how we're thinking about supervision. And last but not least, for the smaller end of town, as we mentioned this morning, we've tried to give some short-term relief for entities that are needing a little bit more time to kind of hit across all of the 10 elements of the 10 commandments. And we've taken this as a step to create sort of a bit of a release valve in these areas, but we're sort of still comfortable that entities obviously remain compliant with 231 and 232. So there are business continuity plans in place. It just gives a little bit more time for the smaller end of town to make that shift into the critical operations lens.
Fantastic, thanks, Alison. Obviously, we know, John mentioned earlier, and you've said it as well, I mean, the standard is still the standard, the requirements are obviously very much there. It's the flexibility in the approach that has been provided now through the adjusted final guidance, which is fantastic. Dan, as you've seen the final guidance, and I know you can quote back every paragraph of it, how do you see the changes coming?
Yeah, look, I think Alison's sort of hit on most of them. I think for anyone in the room who's working on 230 that hasn't had a look at the material that came out on the 13th of June, definitely have a look at it. There's probably three key artefacts there. One's the media release, which is always good to see how APRA are positioning the practice guide and what they think is really important. The second is obviously the final practice guide, and credit to APRA for dropping from, I think, 37 to 22 pages. It's clearer, it's more concise. But the third is APRA's response to the industry feedback. And for those who interact with kids every now and then, it's sort of like if we think of APRA as a parent and us as the child, the Prudential Practice Guide gives us the but why, and the response to industry submission gives us a but why type response. And so reading that, it's a good, I think it's about 13 pages. There's some really good insights in there. And I think a couple of them that Alison touched on is the supervisory framework. So, as a material entity, it helps me manage the expectations with our board that APRA in the first 2 years will do a prudential review on some of our major entities. If Commonwealth Bank isn't in the list for years 1 and 2, I'll be very surprised. So that helps manage the expectations with board as to what would be coming. Alison touched on the checklist. We'd created a document internally, so we're very clear within the organisation of what do we need to deliver for 1 July 2025 and what can come after that. The third bit around the message to do with the difference between CPS 900, resolution planning, and CPS 230. So for those that are looking at both, Clause 11A in CPS 900 talks about critical functions. Clause 35 in CPS 230 talks about critical operations. The definitions are very similar, but they're slightly different. And I think APRA's additional insight and information on there is helpful for those that are looking at the two prudential standards side by side.
And you're the walking encyclopedia of the guidance and the standard, any paragraph you want. Bryony, anything noteworthy that you've seen from the change?
I think I agree with everything that's been mentioned. I also picked up on the recovery and resolution reference, which is in our space and something that we advise clients on in the response paper. And I think I really welcomed the APRA guidance around what that might mean for contracts, the potential efficiency in approaching material contracts together from a 900 perspective and a 230 perspective. Obviously, there's challenges that sit with that in terms of suppliers and negotiating with suppliers, but it very much reflects some of the advice that we've been giving to clients as well. So I thought that was interesting to see.
Fantastic, thank you. So Dan, going over to you now, in terms of CBA's CPS 230 implementation, what are the key steps that CBA has taken? How do you believe you're currently placed, and what are some of the lessons learned?
Yeah, let me break that down. And look, firstly, it's a privilege to have the opportunity to speak with this audience today, especially on behalf of the great team of people I get to work with at CBA. I think if I looked at the time frame, so we're running at two interconnected but very different time frames. One's the time frame that everyone in this room will be thinking about, which is 1 July 2025, and what do we need to do to meet the requirements of the Prudential Standard by then. The other one we're running to is what happens if an incident occurs tomorrow. Are we more resilient tomorrow than we were today? What have we done over the past week to drive an outcome for tomorrow? If we can implement something that we're working on for CPS 230 sooner, great. So if we're identifying minimum service levels to do with tolerance 38C, why wait until 1 July 2025? If that can help our customers should we run into an incident tomorrow, let's put it in place. And so we're relative to CPS 230 timeframes, happy with how we're progressing. Relative to if something happens tomorrow, I think my answer will always be not ready yet. But I think we're doing some good work in that regard. Maybe just briefly on the prudential standards. So we sort of break it into 4 parts. There's a section on op resilience, there's op risk, there's a section on business continuity management, section on material service providers, and then there's a 4th bit which is actually gluing it all together. So depending on the size and scale of your organisation, you might have 3 teams that then need to come together, or you may just be running it under one function. But in terms of the glue, I feel comfortable we've got the right governance frameworks in place, steering committees, accountabilities, roles and responsibilities, engagement plans with the board. All that's done in a regular cadence in keeping the board updated. Our op resilience team or op risk team are doing a great job. We've got a very mature risk framework, but that interconnection then of taking that framework and connecting it to critical operations and material service providers through some new dashboards are coming together, which looks good. Business continuity. Look, we've been looking at this for a long time because of incidents that have impacted customers. If you look at anything from natural disasters, black summer fires, pandemics, tech outages, that impact on customers forced us to start looking at a list of important business services when the UK first launched their regulations back in 2021. So we've been iterating that list for the past 3 years. And so our critical operations have been through the board. We've got owners of them. We've developed some preliminary tolerances. We're working on testing strategies. And then across to material service providers, the team's doing a great job there. They've adjusted their materiality assessment, because obviously the definitions between the old CPS 231 approach to how you think of materiality. I think clause 14 is very different to clause 49 in CPS 230, and how you adjust that to then come up with your list of material service providers. So happy with that progress. I think your final part was any key learnings. I think don't try and get it perfect, like create a list, iterate it, start early, like engage with your critical operation owners around your organisation, get them involved in creating tolerances. Some of the most valuable workshops we've had to date have been with our group executives and our critical operation owners debating tolerance levels and definitions of critical operations, and that gets there. It gets their buy-in early, but it also helps us develop some minimum service levels in some cases early on. Some are still very ambitious and theoretical, and we've got a lot of work to do in the next 12 months. But don't try and perfect it. Engage early and be prepared to iterate.
Fantastic, thanks, Dan. So, Bryony, on that now. So, what are some of the common challenges and key issues that you're seeing entities facing, and what should they be conscious of or keeping in mind? Obviously, following off from what Dan said there now as well.
I guess to put that into context, we're advising not only banks but also super trustees and insurers on CPS 230. And I think what's interesting across all of those entities is, yes, there are some specific things that are relevant to specific sectors, but we're seeing some fairly common challenges in terms of the discussions that we're having now and even sort of where they were sort of 6 to 12 months ago. I think the 2 key challenges that we see, one is right sizing and one is certainty, if I can put it like that. So what I mean by right sizing is how APRA regulated entities look at recalibrating their compliance processes for CPS 230 and how much they feel that they need to reinvent those processes for 230. And we've very much seen the pressure from clients to feel like this is a reinvention exercise. All previous processes are out the window. 230 means something completely new. We need to start from scratch. I'd love to get Alison and Dan's views on that, but from at least an advisor perspective, where we start and where we start having that conversations with clients, because often that's where they actually get stuck looking for perfection with that reinvention process, is to say, you've been complying already with 231, you've been complying with 234, you've been complying with 232. You have a really great, robust bedrock in most cases of processes that you can leverage. Yes, the perspective is different. Material service providers is a great example. Yes, critical operations is a new concept, but what can you build on from your existing processes and framework? And then where can you identify your incremental gaps? So don't feel like this is a reinvention exercise. And I think that identification of critical operations and material service providers is a good example. And Alison, I know in the response paper, APRA talked to knowing that people were taking that bottom-up approach. Let's start from all of our providers and then work out what's critical. Whereas I think the APRA view is, well, actually start top-down, go critical down to material service providers. And I think that very much, that view of, well, how do you right-size that for where you are as an organisation is a big challenge. And I think that's where people get a little bit paralysed. I think the really important proportionality question comes into that as well, and I know that that's something that APRA's spoken to in the response paper and in the drafts around how do you right-size from a different perspective, how do you right-size for the size and complexity of your organisation, and recognising that a small mutual bank will be very different to a CBA and all of the pieces that fit into that. So I think that's probably the first kind of key common challenge, and that's not just banks, that's everyone. I think that flows into the second key challenge, which is similar, which is certainty. How am I certain that I've got this perfect so that I can go to APRA with my plan and say that I'm compliant by 1st of July 2025? Partly that has been driven by some clients by really wanting to see that final guidance and hoping that would provide lots of answers. I think as Alison, as you've said, and as consistent with other APRA guidance, it is principle-based. And so that is there for flexibility for organisations as well. But that does lead to the question of how do I know I'm complying? So I think that's kind of challenge number 2. And I think I've seen that played out in different aspects of 230. So going to the material service providers bit, where banks have had to think about providers that they don't currently think of in an outsourcing context. So mortgage brokers is a good example. How do you put a 230 framework on this network of mortgage brokers as one example? And how do you do that in a way that you know is compliant? How do you look at downstream providers for other service providers and get certainty? What does that mean from a diligence perspective? So I think they're the main challenges that we're seeing clients face into, and I think they bring in lots of the things that Alison and Dan have mentioned, but I'd love to hear from Alison and Dan to see whether that's on the mark with what you're seeing, and how do you move past perfection, I guess is the other question for you, Dan.
Maybe just I think that's a really good summary. I think I wouldn't underestimate the difference between this prudential standard, especially in a business continuity phase, just in a context set. So for those that have sort of worked in business continuity for a while, and I've sort of had the privilege of leading the bank's continuity and crisis response team for the past 8 years. So anything that's gone wrong in the Commonwealth Bank or in the environment in the past 8 years, part of my job is to chair that response. So I've learnt a lot through that process. But if you look at CPS 232 and the 2017 version that APRA published, which is the one we're held to account to today, the definition of critical business operations under clause 23 is it's the functions, infrastructure and resources. So everyone's taken this view of how do I structure my organisation and create business continuity plans in a hierarchical sense. Where are my assets, my people, where are my workplaces? And how do I recover them? What are my call chains if I have a problem? If you look at, and that definition is exactly the same if you go back to the 2014 version. It hasn't changed, clause numbers changed, but the definition hasn't changed. But if you look at CPS 230, we start with the words, they're processes which if disrupted. So suddenly you go from looking at business continuity in a hierarchical sense to business continuity in a what's important for my customers. If you go to a natural disaster, Brisbane floods, the Black Summer fires, you're looking at access to cash, ability to make payments or the ability to make a card purchase, the ability to settle a property. If you look at things like COVID, it's financing daily operations. How can I continue to fund my business? So how do you look at critical operations that reflect incidents we've had in the past? And when you start stretching business continuity across your organisation, people are used to operating like this and you're forcing them to take accountability for things that don't necessarily reflect their perfect reporting lines. That's a hard part. And I think the earlier you can start on that journey of bringing critical operation owners on board, that they've got to take an organisational view, that's I think, one of the best bits to start on early.
Alison, you want to add to it?
So just reinforce what Dan shared, but I think that challenge around seeking what's perfect and what compliance looks like, it would be a trap for me to tell you what that is. So, and that's because it's really unique to each of your businesses and your risk appetites. APRA doesn't expect perfection. I think it really comes down to how have you thought about each of those elements, and how can you, how can your board get comfortable to actually really own how you're managing those critical operations where you've set your tolerances, and how you are managing those material service providers, to use our language. So the answer is actually quite unique, and we take the same lens. So as much as it'd be great for probably all of us to say, do these 10 things and everything will be fine, that won't actually deliver the resilience that I think we're all collectively looking for.
Yep.
So hopefully that's helpful.
Thank you. And I mean, it's amazing to see what organisations now are leaning into to really understand the crux of their business and what it means for the first time to unearth. I mean, there's lessons learned across probably every entity here in terms of more about the business, the importance of being able to support customers, the market, etc., that they probably didn't realise beforehand. So we spoke briefly there, and Bryony, you mentioned obviously around proportionality. So Alison, going back to you here. So we understand obviously the degree of compliance burden that obviously entities are very much concerned with in terms of meeting the requirements under 230. Dan, you've spoken around the breadth of it, and obviously there's depth associated with that as well. When it comes to small entities, how are these challenges different as opposed to from a proportionality perspective?
So I think we've talked a lot today actually about complexity, and I think we very much experienced through our engagement bilaterally that I think smaller entities that have a really sort of straightforward suite of products and simple processes will find 230 implementation pretty straightforward. I think where you've got a broad range of potentially interconnected products with a mixture of sort of in-house and outsourced activities, which might actually occur across critical operations, then that's where thoughtfulness and a systematic approach is needed. And I think size definitely assists, but it's really down to complexity and complexity of your business. And so I think what we were trying to help by being quite clear in the 10 Commandments is to try to sort of provide that way to step through, that whether you're big or small, it will kind of give you a sense as to what are the kind of steps to work your way through, and hopefully that will lead to a sort of a much more targeted and straightforward approach for a smaller entity. And then of course we've given just a little bit of the extra time that I mentioned before. So
fantastic, thank you. So, Bryony, I'm going to throw across to you, then Dan, I want your input on this as well. But what does CPS 230 implementation look like come day 1 July 25?
I'd like to know what it looks like for CVA, because she sounds like you're sorted. But I think from my perspective and speaking to different clients, I think that for entities will have the frameworks in place from a governance perspective, and I think those frameworks to identify critical operations and material service providers. I do think that the next challenge, even before in the next 6 months, which will be continuing then, is engagement with suppliers, and I think there will be an extra period after 1st July 2025 to get all contracts updated to the extent that applies for suppliers. But I do think recognising that a lot of the large suppliers will have multiple customers who are coming to them in this space, they will probably have formed their own view as to what they're willing to agree to from a 230 perspective. And then there'll be suppliers, as I mentioned before, that have never even engaged with 231. So this concept of additional contract uplifts will actually be a whole new world for those set of suppliers. So really that negotiation strategy and sort of understanding how to efficiently and without lots of additional cost and contract negotiation actually do that uplift process, I think will be something that some entities are still grappling with on July 2025, at least from my discussions. But
yeah,
Dan,
I think like 1 July, probably for many of us in the room, we might feel a little bit dusty if we've got there and celebrated the night before. But on a what have we delivered? I think it's going to be an interesting transition. What's not in the list of 10 is that you've tested all your critical operations and you've been able to meet your tolerance levels. That's a real shift from 30 June 2025 to 1 July, is then getting into that approach of how to actually test and make sure. And we're trying to do some of that testing before that date, more so to inform our tolerances and inform our board of our current view of whether we can meet the tolerance levels. But I think that's going to be that'll be a really interesting shift. Obviously, in the material service provider space, there's that additional 12 months on contracts, so not everything will be done by that time. But look, I'm expecting we get to 1 July 2025. We've met the requirements. We've self-assessed and had some independent assessments that we're in a good spot. But then it's a matter of testing, understanding the gaps, making sure we've got investment programs to address those gaps. And between now and then and anything after, what can we learn from every incident that we experience ourselves directly or indirectly, and what do we see, and how do we factor that back into our annual review cycle of, do we still have the right list of critical operations? Are the tolerances still appropriate? Do we still have the right list of material service providers, and how do we review it on that sort of annual 12-month basis from there on?
Alison, what's your view?
So I think it leans back into a little bit of what I was mentioning around, we're not looking for perfection on day one. We recognise, and I think we've made it, pretty clear through response paper and speeches and even what we're saying here today, that there's a journey of maturity to really, the first cut that you get through governance and you sort of start working with is probably going to change maybe the next day. But, it's an iterative process. The risk environment will continue to change. Your customers' expectations will change. And so I think what we're looking for is the mindset shift, the focus and the plan to get there, even if it's not sort of bang on perfect, as there is no perfect for day one. So
I've got to say, the way Alison looked across, I've got a feeling day one will be preparing for a prudential review quite soon thereafter. I'm guessing.
I was just leaning back at that point.
Starting to learn how to read Alison's face.
Our frontline supervisors will be in touch.
Excellent.
They already are. Fantastic. So we're going to open up to questions now across the room. So please, obviously, fire away questions as you see fit.
We've got a couple of microphones there in the room. Who wants to start us off with some audience questions on CPS 230? As you see, normally I'm quite happy just to ask questions of the panel myself. On this one, I'm going to leave it to you. Who's got something they want to ask about CPS 230? Anyone? Show of hands. Wave your hand in the air. Like you just don't care. We've got a question down the front here on my left, then one at the back of the room. Let's start down here. What would you like to ask, mate?
Hi, I'm Adam from NAB. Look, thanks for the presentation. Lots of insights there were really helpful. Just on the mindset, so I've heard Dan, you mention it about critical ops owners and understanding, accepting the enterprise perspective, and Alison as well. How's it playing out? Because I think that's one of the biggest changes that we're seeing with 230, building that resilience, that mindset to think about, not just about a division, but the company, but also the country impact as well with the customer.
Yeah, maybe I'll start on that. I think depending on where organisations are at working through their critical operation process, defining what the scope of the critical operation is an important part. So what does if you take make card purchase, that ability to tap a plastic or your device to pay for essential goods or services, what's the scope, what products are in scope, and what does that look like? And then sitting down with a critical operation owner, and one of my colleagues in the room and I had a discussion with a critical operation owner, and they're like, no, that product shouldn't be in there. I don't look after that product. Like, that's the whole intent. It's more than just your products. It's actually, you're now owning a process on behalf of the group. And so documenting a scope to validate that discussion or to anchor that discussion, I would recommend as a helpful starting point.
And I just build on that to say, I think what we've seen in our bilateral engagements and where entities have reached out to sort of test their thinking The leadership of the program has come up as one of the things that shows up. I think the program being led by risk teams or by just one part of the organisation presents some challenges. I think where that leadership is kind of living or very closely aligned to the business owners, we are seeing greater success with the real understanding of critical operations. So, having it embedded with the people who the bread and butter of their everyday is the critical operations. So, and obviously the key is beyond 1 July, moving into BAU and continuing to have that mindset embedded, and that is a big part of it as well.
Can I ask one question, Alison? I was out of the room for some of the presentation, so if it's already been covered, feel free to say. It's human nature to leave your homework until the night before and to go. Are you doing any doing any official or unofficial sense testing of where people are at on this? And if we looked at the entire population, ahead of the curve, where they should be, really need to do some work, could you put any vague numbers on percentage of that, where people are at?
So I'd say we've been receiving a lot of requests for people to come and talk to us and to kind of check in with thinking. I think there's a section of the industry that would probably pretty much be compliant today. Then there are others who were very much waiting on the guidance and might have been slightly disappointed that the guidance didn't tick all the boxes or give you the boxes that you needed to tick. I think the key is just to get in there and get on with it. And the other observation that we've had is if you're struggling to get going, do a pilot program, pick a critical operation, really pick that and follow it backwards through the process, back down into how you've been managing those risks, usually on a divisional or a product basis, and try it out. And I think once people try it out, they kind of start to see, hey, this isn't actually as difficult as it is. So I think the idea is not to leave your homework till the night before, and we are seeing good progress. But if you're stuck, I think that pilot program piece is quite valuable.
Great session, Gavin. Thank you so much. Alison, Bryony and Dan, please give them a big round of applause. Great stuff.